All right, so when a banking giant like Barclays drops its annual results, you can bet that everyone, from investors to economists, sits up and pays attention. It's not just a health check for the bank, but kind of for the whole economy. So, the big question is, how did they actually do in fiscal year 2025? Let's get into it and check out their report card. So, what's the bottom line? They absolutely crushed it. In a year that had a lot of economic question marks, Barclays came through with what you can only call a clear success, hitting the really ambitious targets they'd set for themselves. But, success is a big word, so let's see the proof. And yeah, the proof is pretty compelling. This was basically their to-do list for the year. And look at that, a clean sweep, check marks all the way down. From their main profitability measure, RoTE, to managing costs and paying out shareholders, they didn't just meet the goals, they hit every single one. That tells you a whole lot about their focus and discipline. Okay, so we know the verdict is success. Now let's get into the nitty-gritty. What are the key numbers that really drove this performance? First up, the big one, profit. We're talking £9.1 billion before tax. But honestly, the number itself is only half the story. The really interesting part? That's a 13% jump from last year. That's not just good, that's some serious forward momentum. Next, we've got a number that banking analysts obsess over: return on tangible equity, or RoTE. They hit 11.3%, beating their own target. This basically tells you how good they are at turning shareholders' money into actual profits. And trust me, a higher number is exactly what you want to see. And hey, all that profit? It's great news for investors. Barclays sent a massive £3.7 billion back to its shareholders. This is just a huge signal of the bank's health and its confidence in what's coming next. The key takeaway here is that this success wasn't just on paper, they actually shared it. And this chart right here really drives home the point that this year wasn't some lucky fluke. Just look at that trend. From $6.6 billion in profit just 2 years back to over $9 billion now. This isn't just one good year. It's a real pattern of sustained growth, and that's what builds real long-term confidence. Now, a huge bank like Barclays is made up of a bunch of different businesses. So where did all this incredible performance actually come from? Let's pop the hood and see which parts of the engine were really firing. So before we jump in, let's just make sure we're all on the same page with RoTE, because you're about to see it a lot. Think of it as a bank's efficiency score. For every single pound of shareholder money they put to work, how much profit do they squeeze out? It's really the gold standard for comparing performance, whether you're looking at different banks or, like we're about to, the different divisions inside Barclays. And this table tells such a cool story. I mean, look at that. The clear star of the show was the private bank and wealth division, with a monster 26.3% return. That's because those kinds of businesses often bring in high fees without needing a ton of capital. The main Barclays UK bank was also super strong at over 20%. And even the investment bank, which is always the most complex and capital-hungry part of the business, pulled in a solid double-digit return. This really shows you they have a mix of businesses that are all performing well. Okay, so having a great year is one thing, but the market always asks, yeah, but what are you going to do for me next? Well, Barclays came ready with an answer, a whole new strategic plan to build on this momentum. Their whole plan really boils down to 3 simple but powerful ideas. First, make things simpler. That means cutting complexity, becoming way more efficient. Second, be better. Use that new simplicity to create top-notch products. And third, become more balanced, making sure the bank is strong and isn't relying too much on any one part of the business. And that simpler idea isn't just some corporate buzzword. They mean business. I mean, look at this. They're planning to chop their tech applications from over 80 down to less than 40. And they're taking their core accounting systems from 11 down to just 3. That is a massive overhaul that should lead to lower costs and way better efficiency. And what's the whole point of this plan? It's all about one thing: pushing those returns even higher. After hitting 11.3% this year, they're aiming for over 12% next year, and then a really ambitious goal of over 14% by 2028. This isn't just a vague hope. It's a clear roadmap for the future. So, after digging through all the numbers, all the strategy, what's the one big thing you should really walk away with? It really all comes down to this single question. Barclays had a fantastic 2025, no doubt about it. and they've laid out a super clear, very ambitious plan for the future. The strategy looks solid, the targets are set. The real challenge now is all about execution. Can they actually deliver on this promise, especially if the global economy decides to throw a few curveballs their way? Well, that's what we're all going to be watching.